What's up, everyone? It's Scotty with MoneyVest. So we've got another very interesting week, although not a lot of economic data that's coming out in the upcoming week. But of course, September seasonality alone is more likely going to be enough for the markets to see a very, very volatile or very unpredictable environment. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. We do still have a few earnings that are coming out that are going to be very interesting. So I'm going to break down exactly which company earnings, and I'll break down specific stocks and companies, dedicated videos for those companies as well. So again, links to our Discord Patreon is going to be down below if you're interested in joining. First week of the month, best time to join. And also don't forget, we do have the fundamental technical analysis courses and the bundle along with the options course, everything 50 to 60% off. Coupon code is going to be labor4 if you want to take advantage of that. And this does expire Monday night. So again, you've got another day or two left if you want to take advantage of that. So this right here is the economics calendar. Like I said, it's a very muted week. There's not a lot of data coming out. We already got the unemployment numbers on Friday. We don't have the inflation numbers until the following week. So not next week, but the week after. And of course, we got the FOMC meeting in towards the end of September as well, right? September towards the end, I think 23, 24 is when those FOMC meetings are. I could be mistaken, but I think that's when the FOMC meeting is. We do, however, have the beige book, right? So that's coming out at 2 p.m. Eastern on Wednesday, September 6th. Of course, mortgage applications come out every week. We got the Fed's balance sheet. We got the jobless claims. Those are some of the weekly important catalysts, but beige book does come out not that many times a year, I think 8 to 9 times a year. And that, again, is going to be coming out next week at 2 p.m. Eastern. So when it comes to earnings, we are kind of winding down here with the earnings season. So there's not a lot of companies. The calendar is starting to feel pretty empty. But we do have Zscaler reporting on Tuesday after the bell. So we've already done analysis on Fortinet. We've done analysis on Palo Alto Network, on CrowdStrike. And then now Zscaler kind of fits in that same bucket of companies. And we've had a swing trade idea on Zscaler in the past, done really well, and they are going to be reporting earnings. So I will be going over them specifically in a dedicated video, going over their earnings as well. Then we've got Express reporting before the bell. On Wednesday, we got C3 AI, another very, very interesting and popular retail stock, reporting their numbers after the bell on Wednesday. We got UiPath, GameStop, I don't have to talk about it. ChargePoint, we got Dave & Buster's, and that's pretty much going to be it. And that's going to wrap up the earnings season. A couple more companies, DocuSign, we got Planet 13, I believe that is, and then we got RH reporting their numbers along with Kroger on Friday as well. So that's going to pretty much be the entire earnings calendar. Not a lot of companies, to be honest. Now, if you go over to the S&P 500 and the NASDAQ, this upcoming week, we've got a very big resistance test at close to 4,600. So we got up to as much as 45, 41, 60 points away from that resistance. And you'll notice that we are getting back up to the same level from March of 2022. So that's exactly where we got rejected before the S&P started selling off pretty aggressively, down another 18% from those levels. So that right there is the resistance that we are going to be watching very closely. That's exactly where we got rejected in the middle of July as well. And the S&P saw a very reasonable pullback of about 5 to 6%. We came down to that support at around 43.30. So this right here was that area of demand, that area of support before, of course, recovering back higher, rallying back. The last couple of weeks, very, very strong. Of course, last week was up 2.5%. And that next resistance, once again, is going to be 4,600. We'll watch whether the bulls have what it takes to break us out above that level, or if the bears are going to be strong enough to reject us for the third time in the last 18 months. So March, of course, we got rejected. This right here in July of this year. And that's going to be that potential upside for the S&P, which is going to be about 1%, 2%, 2.5% to be precise, to get up to 4,600, 4,630. Same thing with the NASDAQ, identical pattern. So we got rejected here. This is the same exact resistance coming in since March of last year, which has in fact acted as support for the NASDAQ in October of 21, which also acted as a resistance back in April of 21 and also February of 21. So it's a very, very, very important level for the NASDAQ. This is literally where the bulls and the bears kind of come together and make decisions whether we're going higher or lower. We've got rejected twice, then support, then resistance, resistance, resistance. And now once again, we're testing this level for the fourth time in the last 16 to 18 months. So we're getting up to that level once again. And that is going to be sitting at 14,300. So 300-point rally for the NASDAQ, expected another 1.5, close to 2% before we start to see a little bit of that pressure from the sellers and from the bears once again. So those are going to be some levels to watch. Again, oil prices, keep a close eye because we have seen oil prices move higher. So if you come over to our energy watch list, crude oil has been going higher. It's now back up to almost $86 a barrel. Monday, the markets are obviously closed. It's going to be a shorter week. Trading volumes could be a little bit lower. It's going to be muted from an economic standpoint, but there's still going to be the beige book and the earnings coming out. And the market still has a little bit of ways to go before getting up to its all-time highs. And volatility has been a little bit suppressed as well, coming down to now close to 13. Once again, 11 is going to be that next level down. Resistance all the way up to 14 to as much as 20. We haven't really seen 20s since May earlier this year. And of course, we've just been sliding lower. The 10-year yields, very, very quickly going over those. We are still seeing the Treasury market, especially the shorter end of the curve, still move higher, still trading above 5.5%. I did a video earlier going over the S&P 500's valuation, also talking about the equity risk premiums and how it is still positive on a projected basis. But of course, if the Treasury market continues to move higher on the new issuances of debt and the Federal Reserve's quantitative tightening measures of basically rolling over their balance sheet, then it's possible that we do see some more upside from the Treasury market, which could put in some more downward pressure on equities as well. So that's where we are. Hope you guys enjoyed this video. Next week is going to be interesting. Again, since September seasonality is going to be something to watch out for. But overall, I'm going to be ready to deploy some of the dry powder and, of course, dollar cost average with the cash that's available sitting on the sidelines, not only for the S&P 500, but of course for a lot of individual stocks as well. If they do represent opportunities, I will be ready to either sell puts or dollar cost average and buy straight up if there are going to be some stocks selling at discounts. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. And again, first week of the month is the best time to join. I'm going to be posting some members only private videos going over my shopping list, going over stocks that I'm planning to buy, and my specific fair values, which I know you guys love, the intrinsic value that are so far below the actual market price, but that's how it is. That's how we could get good deals. And I will be posting a separate, more dedicated video for members only in our Patreon. So if you want to get access to that, link's going to be down below. As always, happy investing. I'll see you all in the next video.